Good day. Ira Epstein with your financial market wrap-up, and what a day it was. You know, if you take a look, and it is, by the way, Wednesday, the 1st of June, 2022, and remember, sell may go away. Well, you started off June with the markets lower. Will they stay lower? They gave up quite a bit from the day's highs. You did get up 700 points almost higher in the Dow and gave that all up. That's a lot. And you did the same in the other markets. Why? Because they hit their Bollinger Bands. They all hit them yesterday, and today is the day they're backing away from them. That's the importance of that. Energy prices still on a tear to the upside. I have no idea where resistance comes in when you keep doing this, but I'll show you on the charts where the chart says it. Me wondering where it's at. What good's that anyways? Bonds and notes, we'll look at the territory. They're still adding yield. And the dollar. I thought the dollar would be a lot weaker. Frankly, I thought it was going to have trouble in the 102 area. I can't believe that it got up 50 points higher, and I have a feeling I'm dead wrong in being bearish it right now. I'm questioning it, I'll tell you that. When I look at the S&P on the weekly chart, okay, for the week we're down 1.37%. You never did get back up to the 18-week average. Bear markets, will they do it? Sometimes. When we look at this rally here, you're in a pause, no question about it. The pattern is still bullish in the sense of higher lows, higher highs. I think you'd agree with that. The market is still over the 18-week average. It didn't make it up into key resistance points of the 100 and 200-day average yet. It may not. If it's a true bear market rally, it doesn't have to. What it did get up to was right here. Now, if you take a look at this, here's a market on a tear to the upside. If it clears the 18-day average, the only next close resistance is the Bollinger Band. What are the odds of the market stopping at a Bollinger Band? 95%. Why? Because it will trade within the algorithm 95% of the time. That 5% can do anything. But if you take a look, when you get under it, you don't really stay under it very long, and that's the key. So I'm looking for the resistance in all the indices, not just this one. If they all got up there, for that Bollinger Band to be offering some resistance. This is yesterday, and this is today. So whether I'm right or wrong, I'm not wrong that the market did find the resistance at that number here, and you're overbought. Overbought, not embedded, hit a Bollinger Band. So long, baby. Goodbye. Had a great day. NASDAQ, same thing. You come from down here in the lower Bollinger Band area, hitting this. You get up, you kiss it yesterday, and you back away today. Kiss it yesterday, and the Dow back away. You've really gone from lower band to upper band in a 2-week period, just straight on up. Those are called vertical price rises by me. They're very difficult, if impossible, to catch. The idea is to know to be coming out down here because you're not embedded, and magically you don't get caught. Very important. And up here, no. I would never have a trader buy a Bollinger Band. It's just not going to happen, nor are they going to go short at the lower one. I teach that in my course. In the Russell, overbought yesterday. Where did you go? You hit the band. You hadn't hit it prior to that. Go to all the indices. You'll see it. That yesterday did it. And that's where I think the pros said goodbye, coming out. You're not even trending here. You have a lower and low, higher high. It's difficult. What got into the market today? Well, I think the market looked at the JOLTS report. I watched each of the other reports before it, and the stock market was up. And when the indices started to roll to negative territory, is they saw the JOLTS, and they suddenly saw that the number had fallen about 500,000 jobs. And traders started on TV, the analysts, maybe we're starting to see the first weakness, that all this craziness and job strength, could that be the first sign? First off, a report doesn't mean that you've changed all that. We're going to get the more important jobs data on Friday, and that'll be it. But this was sort of a wake-up call that maybe, the word is maybe, that's what's going on. When you step over here to the VIX, it'll take a moment to load. There you go. In the VIX, what I'm looking at is a market which surprised me. Today it was down. Generally, you don't have the stock market down and the VIX down with it. All four indices lower and this lower. Something's not right. This is your fear index. It doesn't fall with the stock indices typically. So I'm looking at an area that's supportive. You'll know that you got something brewing if you take out yesterday's high of 28.35. Barring that, if it lets go here any further, it's probably going to the 24.10 level, the lower Bollinger Band, which is back down here. And that'd be a bullish event, not a bearish event for the stock market. In the 30-year bonds, game ended at the upper Bollinger Band. Let me just walk you back here. You hadn't hit the number. You were coming up. You fought a battle for a little bit at the 18-day average. I think you'd agree with me. The red line's that, caught in the Bollinger Bands. Now you're overbought. The first time you hit a band, I teach you come out against that band. And I know you're going to say, I'm leaving all that money on the table. My work has shown that you're rarely leaving anything on the table. It doesn't mean you can't. It doesn't mean it won't happen. But I'd rather be on the side like a casino that owns the game. 95% of the time you're staying in the bands. You play that you're going to turn that into a bigger trend down. I want to take the other side of your bet. You will beat me 5% of the time. 95%, if we have to force ourselves into the bet, I'm going to get you. It's that simple. And that's what happens up here. It's no different in the thinking. A chart's a chart. Take the name off the chart. You know, in my full charting course, you know what I do on the charts? I take off the name. Do you know why? I don't want people to think and get an idea, oh, I want to be bullish that, I want to be bearish this. Oh, Ira's teaching this, but those charts are from 2 years ago. The market was bullish. I'm looking to be bullish. I don't want you to know that. I want you to be able to look at a chart and say to yourself for the next day, the day after, I'm bullish, I'm bearish, I'm not bullish, I don't want to be in, whatever it is. I don't want you to look at the fundamentals. Do you know why? You really don't know them. And if you knew them, as the inside people that run these things do, why aren't they multi-billionaires? Well, because the market's got a mind of its own. Just because everything lines up bullish doesn't mean it stays bullish. It's that simple. Somebody knows something else, or the big money comes in, wants to fade the trade. There's always things. Get away from all that. The chart is your friend. You're going to have losing trades. It's a guaranteed. Name of the game is control the risk. Let the profit take itself, and don't start second guessing yourself. I watch people do it and they'll say, I'm jumping out because the market's not going to go my way. How do you know that? If you're not a good trader, you probably know it's not going to go your way. But if you're a good trader and you put your work in, a certain amount of the trades just aren't going to work. It's that simple. Brush it off. Nobody wins all the time. Do the same things consistent. You've got a shot. If you stay disciplined and your work is good, you got a shot at beating these markets. Lower high, lower and low, that's bearish in my school. Didn't quite get to the upper Bollinger Band the way you did in the others. You did it earlier. You did it 5 days ago or so. But now you're back into the down thrust of the market. I think I'm caught in this trade. Coming in, you're nicely embedded. I told traders that I thought that the trade deserved an attempt at a short shot today. And they had it. And take a look. Now, I looked at it. One of my subscribers writes me, well, don't you think yesterday this, and this? Get serious. You go dissect every one of the trades. Nothing changed, my friend. You get daily reports. I didn't go through a Fed action. You get daily reports all the time. Could be the market just changing its nature. It's okay with me. I know where I'm wrong. I know why I'm wrong. I come out of the trade and I'm on to the next one. It's that simple. That's what you have to learn to do. Eurocurrency. I don't want you to be in the euro and the dollar at the same time, one or the other. Why? Because the dollar is comprised of 40% of the euro. So is this a better potential buy? The word is buy than the dollar. Well, after the fact, it looks like it. You're at a 79, you got to be over an 81 reading, and this has to be over a 21 reading. I don't know which one's going to do what. I know that they're both probably going to lose tonight when they reopen their embedded status. That doesn't mean they'll stay that way after you get into the trade a little later in the evening. In the British pound, you're starting to roll over, so keep your eye on that. Got my doubts that you're going to be able to just keep going up to the Bollinger Band. This is a miss, as I call it. It had a shot to be good. The last break low, you just took out the lows today. Do you see that? Not a very pretty chart. Bitcoin, back to the 18-day average. So just when you think, it's out of the woods and so on, it pulls back. It's caught in these Bollinger Bands. They're going to keep narrowing in and take the volatility out of the market for a while as the market spins around, doesn't get big ranges, I think. This is what I'm expecting to happen. And then a trend is going to show up out of here. Which way? That's what we don't know. If you look at the weekly charts, I can tell you off that, it's still bearish. In the Brent versus WTI, we've come back to the 18-week average of closes, day average of close, I'm sorry. In the red line, that's a resistance point. When you come up and you take a look, let's first do the Brent. Market is refusing to stay over the upper Bollinger Band. Gee, I'm so surprised. If you don't understand how to work with Bollinger Bands and you don't want to learn an edge, fine. But if you want to learn it, go to our website at iraepstein.com. Under the word education, right word is, and start reading about what we teach in the Bollinger Band. It will help you, I think, with your trading. You'll never forget it. You won't get caught wanting to be the buyer at these numbers. You'll let somebody else. You'll want to be the buyer at these numbers, but you're not going to want to buy Bollinger Bands or sell Bollinger Bands, and you'll see why. Same thing true of the August WTI. Now be careful. You're flirting with losing the embedded reading. You got a lot of markets that are on the verge of making changes. Dollar to the upside, euro to the downside. This could roll over if it loses its embedded reading. Before you know it, we could be talking here dropping $5, $6 back to where price meets the 18-day average. It's a possibility. You're flirting with it right now. Gasoline. Why would I ever tell a client to buy over and upper Bollinger Band? I wouldn't. And I know you're going to look back and say, Ira, you said that when the market was at 407 and it's now 507. Shame on you, Ira. Okay, I'll live with it. I still wouldn't do it. In the natural gas, we fell back, and here's your footing. It's the 18-day average, as it so often is. 18-day average of closes are the natural spot on a chart where market fights a battle. Now, you hear me talk about all this, and you may not understand it all, but I make it easy. In the morning, I walk you through charts that, if you'll notice, they have a lot more on them than the ones you're looking at. Look at all the lines. They suddenly make sense. I explain them. I reinforce what I teach in my charting course and the enhanced Bollinger Band course. I walk you through it. So you grab your cup of coffee. That's why I show that there. We're going to talk weekly videos. I'm going to bring up weekly charts in it every now and then. We're going to cover all these markets. Yeah, I know some of you say you don't cover the grains and the meats here. I don't, but I do it every day. Every single day I'm covering grains and meats at 5:30 in the morning for the trades for the day. Every day. I'm covering all of the soft commodities, the cotton, the sugar, the cocoa, the coffee. All of them are being covered in detail, and I mean detail. I don't skim over them. It's detail. My videos in the morning, 20 minutes long. These are about 4 or 5 typically, right? Think of how much information, and I make it easy. You're able to just grab a scroll bar on the bottom of our website, and you slide to the areas you want. You can play it over and over. It's as much learning as trade ideas. I'm not interested in managing your money. I am interested in how you manage your money and helping you to do it better. To find out more, go to our website, under education, other courses, under research. You find out about all my morning videos. They're crucial. You can take your cursor. If you move up here, you will get to the morning subscriber video area very easily. I'm Ira. You have a good day. I will talk to you all in the morning. Take care.